Two people can look at the same situation and see completely different levels of risk. One sees opportunity, the other sees danger. The difference is rarely intelligence, it is perception. Risk perception is the subjective interpretation of danger or uncertainty. It is not a calculation, it is an emotional estimate. The brain does not evaluate risk using pure probability. It uses memory, recent experience, and emotional intensity. This is why rare dramatic events feel more dangerous than common statistical ones. Emotion amplifies perception. Numbers rarely do. Risk feels larger when losses are vivid. It feels smaller when recent outcomes were positive. If someone experiences a series of gains, perceived risk declines. If someone experiences recent losses, perceived risk expands. Nothing about the objective probability may have changed, but perception shifts dramatically. The brain anchors risk to recent emotional memory, not to statistical baseline. Consider someone who has just experienced several successful outcomes. Confidence is high. Perceived risk feels low. They increase exposure. They reduce caution. Now imagine the same person after several losses. Suddenly, identical probabilities feel unbearable. They avoid action, or they hesitate excessively. In both cases, risk did not change. Perception did. The brain is sensitive to salience. Salience means what stands out emotionally. Recent events stand out more than long-term averages. This creates recency bias inside risk perception. The mind confuses recent with representative, and this distortion quietly shifts behavior. Distorted risk perception leads to overexposure after success, paralysis after failure, inconsistent decision sizing, emotional swings in strategy. It is not randomness that causes instability. It is miscalibrated perception. If your perception of risk changes dramatically from week to week, it is not the environment changing. It is your emotional memory adjusting the lens. The real challenge is not eliminating risk. It is stabilizing how you perceive it, because inconsistent perception creates inconsistent behavior, and inconsistent behavior destroys long-term performance.